But I think Pramod Patwari, CFO of Balrampur Chini, is with us to talk to us about the announcement from the government in terms of removing caps on diversion of sugar for ethanol. Mr. Patwari, thanks very much for joining us. What does this mean for Balrampur in terms of volumes that you will do, sir? And, how big a positive is this? Does this kind of remove any uncertainty that may have had, although this was widely expected? Go on, sir.
Good morning, Prashant. Yeah, you are absolutely right that it will definitely remove a lot of uncertainty. But we always believe that last year's decision was a temporary decision. As far as the Balrampur Chini is concerned, we have total distillation capacity of around 35 crores liter per annum. This is on the basis of 335 days of working. Now, we produce around 3 crores liter of ENA on an annual basis. That leaves us with a balance of 32 crores, which is absolutely available for production of ethanol. We have one distillery, which is a multi-feed distillery, wherein we can produce around 5 crores liter of ethanol in an off-season. That means the remaining 27 crores is available for production of ethanol out of juice root and B-heavy. So it will definitely have a big impact as far as the liquidity to the Balrampur Chini and the profitability is concerned. It will overall improve the liquidity in the hands of the sugar industry as such, and it will help the industry to pay to the farmers on time the cane price which is announced by the government. It is a very welcome move from the government.
Got it, Mr. Patwari. Good morning. Thanks a lot for joining and give us a number then. For this year, what do? You've nicely broken up the capacity and how things work. For this year, what should you be working with? And for FY26, what should that number look like? That's on volumes. And there's a demand that there should be a price increase as well on the ethanol side. How much are you all rallying for? How much you'll be satisfied with?
So, Nigel, good morning again. And as far as the pricing is concerned, in 2022-23 ethanol year, the FRP was 305, and on this basis, juice-based ethanol was priced at 65 rupees 61 paisa per liter. Now for the season 24-25, the FRP is standing at 340 rupees. So there is formula and mechanism already in place. We have just requested the government to continue with the same formula. So, and whatever little increase they can consider on account of increase in the conversion cost. So that is on the pricing front. For Balrampur Chini Mills Limited, you will be knowing that this ethanol year will begin from 1st of November. So we will have only 5 months of production coming in this year, and thereafter it will get spillover into the next year. In any case, the impact of this relaxation will be felt in the next year only as far as the volumes are concerned.
Correct.
Okay.
So volume for this year will be around 23 crore liters, 24 crores. Should that be a fair estimate?
I think it should be in the region of around 22 to 23 crores liter.
22, got it.
Okay, so sir, take your point
year,
that...
Yes.
Next year, next year it can be around 32 crores liter. So there is an upside of almost 9 to 10 crores liter in a year's time.
Now, please translate that, help us sort of translate that in terms of revenue implication as well. If I look at the first quarter, the sugar business did a revenue of around 1130 crores. Distillery was at 424 crores. Now, let's talk full year basis. Now that the limitations are out of the way, full year, what are you projecting for the sugar business and also distillery now that you get in the 5 months of additional higher ethanol revenue?
So it will be easy for me to convert or explain to that on a season basis. So on a capacity of say 35 crores liter on an annual basis, the distillery revenue can be in excess of 2,000 crores. Maybe 2,100 or 2,200 crores on a full year basis. Now, when we produce that much of ethanol, that means we sacrifice sugar through juice route as well as through B-heavy route. So production of sugar in that situation comes down. If we assume a production of 1 million ton, so that is on a seasonal potential of revenue on a full year basis.
Okay, so if we put both together and try and gauge the top line impact, sugar and distillery, because as you're explaining, sugar will have to go down a bit and the distillery volumes and revenue will pick up. Full year basis, revenue growth for this year with the 5 months of kicker and perhaps next year, FY26, any sort of sense that we can work with?
So FY24, we had a revenue of 5,500 crores. And on the basis of maths, which I explained, which again will depend upon the feedstock availability, which is cane in our case, the full year revenue seems to be in the region of around 6,000 crores. But again,
That's
maybe at the
FY25.
not for 25. A part of it will accrue in FY25, which is difficult to predict at this point in time, and the balance will accrue in FY26. So on a full year basis, on a season basis, now this business can give us a return of around revenue of around 6,000 crores.
6,000 crores. Sir, just a word on sugar, because the math that we've just discussed is based on policy as of now. If the government gets a little generous and allows exports, I don't know, are you even expecting that? Because allowing exports when we are looking at the festive season coming up, maybe that's just a wrong expectation to have to begin with. Tell us your thoughts on that front. And if exports open up, what that will mean for the sugar business.
Extremely relevant question. So to answer that, I think we will have to start with a inventory available into the system as of now. On 1st of October 24, as per our calculation, we will have an inventory of around 8.5 million ton at a country level. We are assuming a gross sugar production of around 32 million ton. Now, out of this 32 million ton, on the basis of this ethanol policy relaxation, we expect around 4 million ton or maybe max 4.5 million ton will go into ethanol. Even if you assume 4 million ton, that means we will have another 4 million ton of 32 minus 4 is 28 against a consumption of around 29 million ton. So we will draw 1 million ton from an opening stock of around 8.5 million ton. We don't need sugar in excess of 5.5 million ton on a normative basis when we close the season. So there is a scope of 2 million ton of further exports which can be allowed. But what we understand, government would like to see the progress of the season and thereafter can take a call.
Okay. All right. Very quickly, Mr. Patwari, last time the conversation was a little bit short, but I need to ask you on PLA. That's the next big trigger, and brokerages have started penciling in some numbers. You're going to be putting 2,000 crores. Total capacity, I think, is around 75,000 tons. Now, I have a DAM Capital note that's saying that by 2027, you should do around 550 crores of revenues. Do you think it's doable?
So, Nigel, as we have said in the past also, at this point in time, we do not have the liberty to say anything as far as the financials on PLA is concerned. So whatever we have said in the public domain, which is in the public domain, that yes, we are putting up this capacity at a cost of around 2,000 crores. And we expect to commission this project in October 26. So part of revenue from the new stream of business will come into FY27 and the rest will get spillover into FY28.
Hopefully next time around we'll get some numbers, Mr. Patwari, but thanks a lot for joining in. You've helped us out with particularly the ethanol business as well as the sugar business. Next time, maybe a sneak peek into the PLA business as well, which will put in some money. Appreciate you joining in. For the time being, though, we'll slip into a short break. You come back, we'll focus on the commodity sector. We have Manisha Gupta, who's waiting for us.